this. So when you work your way down from the higher time frame, like the daily, the 4 hour, you will get more of an idea of where we can head. So we got the evening star. If you come down over here, price is really setting up right now for, really it can drop from here. So, I'm going to tell you right now the two opportunities of how you can look to take this trade right now. Either right now or you can wait. Trade at your own risk though. Me personally, I'm already in this trade. I'm not giving a signal. I'm going to tell y'all a perspective. And if you choose to take it, so do your own analysis as well. So you see right here, price set up this head and shoulders pattern. The left shoulder, right shoulder, the head, the right shoulder right here, right? So now what price is doing, this was the impulse, all right? After this head and shoulders pattern, and also that's another confirmation, as well as what I saw on the daily chart, as well as this supply zone. So the reason why you can build your confidence by having different forms of confirmation that gives you an edge. So this was the breakout. After this type of breakout, I look for a retest of structure, this support structure, which is also the neckline of this head and shoulders. All right. This pullback, this drop alone was like, from this high, this drop was over 500 pips. All right. This pullback from this low was over 330 pips. So price is potentially setting up for the drop. So this is what you can look for. I entered this trade myself, and I have my stop. I put my stop loss above this previous high. That's just me. I entered a little higher. All right. Now these are two things we can see. I would like to see price hold. I would like to see price hold below this bearish flag. All right, because I actually entered at the breakout of this bearish flag, and I was able to catch over 200 pips from that to end the week. So now look at where price is at now. So if price closes below here, this is going to give us more confirmation. We get a breakout of this bearish flag because this really looks like it's just setting up to create this bearish flag right here for the drop. All right, price action trading right here. Price action and market structure. If price breaks back below this level of structure and the trend line, you can look to take sales with your stop loss above structure. All right. My next target will be back at this low, anywhere between 1.47 to 1.45. That's over 200 pips, 250 pips. But I'm expecting this to come lower, back down towards at least 1.40 psychological level. All right. You can also take your Fibonacci from this high to this low. Price is also around 61.8. All right, that's adding a little more confluence to it. So if we get the breakout of this structure point, this bearish flag, as well as it's going to be rejected from the 61.8, we got the impulsive breakout of our trend line. All right, we got a head and shoulders being retested. We got a daily evening star pattern. Look, those are multiple forms of confirmation. This is how you build your confidence when you're looking to take a trade based off of price action, as well as we're in this huge supply zone. This is at a 4-year high. All right. Ryan is also going to cover oil. So, seeing how oil is going to play out can also help us build more confluence when we're looking to trade this cap here as well. All right. So if I was taking my fib from there, let's see what the target, back down. Look, it lines up around where I was looking to take profit anyways. That's one of my long-term targets, which is 1.4. From where price is currently at, that's over 430 pips. All right. So that's USD CAD. This is a bearish sell. If you look at this, we got my crossovers. Like I said, I use indicators briefly. Just to see for more confirmation, but for the most part, it's all price action. All right. It's all price action. Look here on the 1 hour. I would also love to see price close back below my 50 EMA, back below this structure, and that could be a good setup for the sales. All right. So this is what we expect. We're expecting this drop. All right. If price comes back and retests this and stays below, it still can drop. So watch out for that. So that's USD CAD. USD JPY. Let's see what we got. UJ. UJizzle. Okay. This is what I was looking at. So I actually covered these pairs. I just spent about 30 minutes covering these pairs without not realizing y'all wasn't on the session with me. So let's see what we're working with now. So some of these moves is playing out what I was saying. So if you look at UJ, all right, UJizzle had nice bounces from these demand levels. All right. So when we just look at this from a higher time frame perspective, like when UJ had that big bounce, like this is a 1,000 pip move right here. Like, I can't remember the last time UJ moved so volatile so quick. Like probably around 2016. That's when she was just spitting out pips. But that was 1,000 pips. All right. So it's not a coincidence that price dropped or bounce off the same demand level. Nice bounce. And this is when I say you focus on market structure. If you would have missed that initial move, it still is opportunities for you to get in. And this is how you look at entries when you're talking about price action and market structure. So you see here, I'm on a 1 hour chart now. Look at this pin bar right here. This pin bar low. Price stayed above that. When I'm in a strong demand level and I see these type of candlestick patterns, that's what I look for more confirmation of my buy setup. All right. And then if you look at that, price broke above it. It gave you that impulse to break above it, right? It didn't completely break structure. It didn't like break this lower high structure yet, which is right here. That's like once you break a previous structure, lower high or something like that, that gives you more confirmation and more confluence that, okay, we're heading higher. But, you know, price broke above right here. Boom. Pull back down. But it still pulled back down around retesting this. This is the 3-wave I keep repeating. 3-wave. Boom. We going to the upside now. We looking for pullbacks. And look what happened here. Price came back and retested previous structure. Right here. Previous structure high. These are the price points you pay attention to on a smaller time frame to take those continuation setups. We already know we got the confirmation of a huge bullish move from the demand zone. So now you're just trading in line with price structure, trading in line with the trend from that demand level. All right. Then after that, it just kept going. It came back here. Boom, broke above, created a higher high here. You can't make this up. Like it, boom, retested it. Kept going. That's just pure price action, and that's how you trade in line with the structure. So now, leaving that, price basically pulled back towards this supply level. Now, I would have loved for price to reach a little higher towards 112, okay, but it's all good. So now, just like we got this pin bar again, pay attention to these pin bars. Like this is showing you price exhaustion, price losing steam. This is already showing some bearish strong. Like this daily close tomorrow is going to give us even more indication that we can potentially either sell off or we can probably go a little higher. But looking the way it's looking now, it is only Sunday, all right? But we could potentially see this maybe form an even star pattern like UCAD. It looked like that could potentially happen. If this is a strong bearish candle, this is going to be an even star reversal. And this, I'm going to expect more drop. So if you go here to the 4 hour, this is what you expect. Now you need to see price structure broken because this is the high that price made last week, right? That's the high price made. This is the retest of that high. This is now a potential double top being formed. Okay, that can be a double top. But if you want to be more safe and don't try to chase highs and chase lows, yeah, you probably could have entered up here, had a short stop loss. You probably would have been in the money. But if you want to wait for, you know, a safer entry or more confirmation to have more confidence, take the trend line. Really, this is what I would need to see. Okay. I need to see this neckline point right here broken. I need to see this broken. Between 109.5, around 109.5, 109.3. All right. So if price comes over here and breaks through that, impulsively breaks through that, then we're going lower. At that, like from that point, I would need to see, you know, I would love to see some type of pullback. I would love to see a pullback, you know, sell the bearish flags, right? And now you're just trading in line with structure, similar to what I showed you over here. You work your way down. First, you pay attention to how candlestick are closing on a higher time frames, your daily, your 4 hour. Then you can go down to the 30-minute if you want to, the 15-minute if you want to. That's how you get tighter entries. But once you understand what's happening on a higher time frame, it's going to be easier to get more refined entries when you work your way down because you understand that the higher time frame is driving what's happening on the smaller time. But the daily and the 4 hour, that's going to tell you a lot. All right, those candlestick closes. When you're a price action trader, candlesticks are a big part of what you're looking at. And then you add different things like trend lines and other structure points to just give you more confluence, but you're just keeping it simple. You're really just keeping it simple. All right, so that's UJ. Overall, if we get a breakout, I'm expecting UJ to come back down towards 109, if not lower. So, yeah, 109 will be like my first target. Well, it looked like we're already heading to 109 possibly. So 109, anywhere from 109, if price breaks through, strongly breaks through 109, we could come back and retest 1085 around these structure points to the left. We're always looking left to go right. Around 1085 will be my next point, possibly lower. Now, this structure point will be interesting. Once price get around here, that will be an interesting point to pay attention to. Around 1078 or even 108. All right. Once price get here, if price comes down here, that's an interesting point to pay attention to. It can break or bounce. Now, if we break through that, then boom, we're going lower. Just keep it simple. And you just trade in line with structure, just how you see here. Boom, boom, boom. Retest. Keep going. All right, so that's UJ. The daily close tomorrow is going to tell you more. Once you see that daily close, strong bears, you can almost guarantee that you're going lower. But barring any crazy fundamental, manipulation. But for the most part, just off of the technicals, yeah, that's going to tell you a lot. All right. So UCHF, this is similar. This is similar to check gold. All right. Ryan's actually covering gold, so he'll cover that. Gold is looking good as well. So looking at UCHF real quick, similar to UJ. All right. Price had these big bounces from these demand levels. Boom, boom, second bounce, boom, third bounce. Keep in mind that the more that price retests a level, the higher the chances of it's breaking that level. All right. So I like to see the second and third touches after the first bounce or first drop. Those are still fresh. All right. But once you start testing it a lot, that's when it gets interesting. But similar to UJ, you got this pin bar. Pin bar. Daily close right here. Price is showing exhaustion. Yeah, it broke past this high. That doesn't mean that we're not going lower. All right. It just gave us a extension, a bearish pin bar extension. But if you look at the higher time frame, this could potentially be a lower high. You see this high up here, this lower swing high here. This could potentially be a lower swing high. We also just hit the 50 EMA on the weekly, which is a good sign. We could reject from there. So if we're looking at the daily, really, again, it's Sunday, so it's still early. But if this daily candle right here, because I have this descending trend line. So you see, we got this peak high, drop, created this peak lower swing high, extended drop, pulled up one more time, which this was just a pullback to go lower. It just basically retested that support structure there. So we're back retesting that structure. See that? This was support of this structure before it broke through. When it broke through, it retested it. Boom, drop, price action. So we're back at that level. Not only are we back at that level of structure, we're actually rejecting towards this third trend line touch. Look at this, it's already starting to drop. So if this candle drops like this with momentum, this is going to go lower. I'm expecting this to come back down towards 9.6. Now, my first point would be, my bad, I ain't trying to draw all over the screen, but my first point would be around here, 9.7. This support level, 9.7. That would be my first target. Boom. That's still over 100 pips. Now, if we break through that, my next level will be either anywhere between 9.64 and 9.6 will be my next target levels. All right. So these are ways that you can look to enter this trade. And wow, this market is setting up nice right now. So looking at this, similar to what UJ was doing. Boom. You see in these demand levels, look at these pin bars, look at these wick rejections. These are the type of candlestick patterns you like to see when you're at certain levels. All right, so we know this was a huge demand level because we looked left to go right. So after that, you had the extended up move. And similar to UJ, it didn't really fully break this level of lower high right here, but then it finally broke above it right here. It kind of chopped right here, kind of chopped. Let me get rid of this real quick. So it, boom, look, higher high, pull back. This pullback was just retesting this structure, previous structure high. Just like UJ, what did it do? It kept going. Boom, higher high. What did it do when it pulled back? Boom, let me pull back and retest structure. Okay, thank you. It keeps going. It can't make this up. Like, this is real simple price action. After that, what did it do? Broke this structure high. Look what it did. And these are no indicators. This is all price. Price moves before indicators. Boom. Came back down, retested. What did it do? Higher high, retested. So now, and then bounced again. Like that was, this was beautiful. Just like you, Jay, this right here was beautiful price structure. Just price action trading. You could have been riding that wave. All right. So now this is what I'm expecting to look for. If we're looking for a sell, this is what we need to see. This is what we need to see. So hold on real quick. I'm trying to clean some of this up. So you could take your trend line. You could really tighten it up. Put it right here. Boom. So similar to UJ, this could be a double top. This was the high that was created last week. This is now the retest of that high. And you can see prices showing nice signs that it's rejecting. Also, by us looking left, we understand this is a nice structure point. We had previous sell-offs. All right, I don't have to go that far. You get the point. So now, if price breaks through here, it's going to break this. This is the neckline of the double top. Breaks through there, it's going to break my trend line, also break through structure. So now that's more confirmation that we're going lower. So now you just look, be patient. If you're not already in the trade, look for pullbacks. Sell the bearish flags. Just ride the wave. Similar to how you ride the wave over here, retest of structure points, you look for the same thing when you're riding it down. And just keep it simple, but just make sure the risk to reward is worth it for you. All right. That's probably about as simple as you can keep trading. Like a lot of people, you know, they really complicate it. Like sticking to your plan, dealing with the emotional part of things is hard enough. The technical analysis does not have to be hard. It's real simple. Like it gets to a point where you can somewhat, I know people say don't predict, but you can in a way predict. You know, barring any crazy fundamental moves, of course you have to keep in mind what's going on there. But we already do. This bearish candle comes out strong. Now we just looking for those pullbacks. Boom, sell-offs. Similar to right here. You see how price gave it this even star pattern and then it pulled back a little bit. This candle was a pullback. I'm on the daily chart. But if you look at this, let's see how this looked on the 4 hour real quick, just so you can see an example. And this is when you this is how you back test. So you see, boom, price broke from that level here, and then it pulled back. You could even had a trend line here. These are your flags. This here, this pullback, breakout, pullback. On the pullback, you got an evening star. On the 4 hour too, sell that. That's only risking like 30 pips. You selling that, you riding the wave, nice risk to reward. So you looking for those. You see how price kept giving you those opportunities. That's how you just ride it all the way down. All right. So that's you, Chef. It looked like it's getting ready to break out, possibly. All right. So GU. GU was a pair that I was able to catch. I caught some of the GU buy last week. It's under a lot of bearish pressure. All right, it's overextended. It's actually the lowest it's been since 2014. So it broke past that low. But if you look at how that weekly candle closed, it pretty much slightly closed around the same level of this weekly wick to the left. So if we come down to the daily, this bearish, this candle is, you know, it's not showing enough. It's a bullish, interesting bullish candle. So looking at this right here, this was a range. Price was moving in this range. It was choppy in this range. Right? So when you're ranging like this, it's setting up for the next breakout. So price extended. I'm sure it was a lot of probably orders right here. People looking to put stop losses, limit orders, and they took them out and then gave you the bullish engulf and then rose up. All right? So that was the higher high. Now this pullback could potentially be the higher low for me. Because now this is going to have to do with what's going on with the dollar as well. Ryan's going to cover the dollar. But I believe this is setting up for just a pullback to go higher. All right. Now, I wouldn't enter this right here. I mean, if I was entering right here, it is showing round bullish rejection. You could potentially, if I was looking to enter, just hypothetically speaking, I'm not entering this trade. But if I was looking to enter, my stop loss would be a few pips below. But really, to be safe, I would need to see, you know, like a break back above here, then look for a pullback to take it higher. All right, I believe GU can head back up towards 1.2. So after creating this higher high, I'm expecting another high to be created. So if we taking your fib from this swing low to this swing high, It's around the 78.6. You see the negative 27 is actually higher than 0.2, but 1.2 would be a good target to reach for, at least back up to the previous high it just made around 1.93. All right, so that's GU. EU, real quick. EU is similar to GU. So if y'all remember, like, I didn't expect this drop to be so big. Like, we caught this up here, and it was obvious that it was going to sell off up here at this interesting level. It was obvious, if you just look left, this was going to be a nice potential sell-off region. All right, this is a key level. Boom, nice rejection. But this thing dropped over 700 pips, so it kept going, you know. And I went over it on the last session. The candlestick patterns is what gave me more confluence to take this trade. So now looking at where we're currently at, I'm not going to go back to how the sell played out. So we broke this low. GJ, yeah, Ryan's going to cover GJ in a few. I'm just going to cover probably another pair after this, then I'm done. Looking at this, price broke this low right here. It broke that low, all right? So we could be pulling back to go lower, but looking at this, I am expecting a nice pull-up now. Similar. Notice these price action patterns I'm showing y'all is all similar. Pin bar again. On the daily, price exhaustion. This is a sign of price exhaustion, especially when you're overextended like this. A nice drop, a nice rise. You start seeing these type of candlestick patterns. All right, pay attention. And then boom, this daily candle look like if it closes above, wick above here, then we're gonna go higher. You know, so looking at this, this is also a potential double bottom. Like this is the low that it formed. This is now retesting that low. This is the neckline of this double bottom that's potentially setting up. So these are the structure points you pay attention to if you're looking for potential, opportunity. So if I come down here, you could take a counter trend line. Boom. So once we break above here, you see, boom, you got this pin bar right here. Boom, it's rising. That was a retest of the low. So this is a double bottom. It already broke above this neckline on a smaller time frame. It's 30-minute though, so it doesn't hold as much value or much weight as the 4-hour to daily. But you know, just price action is price action. But you got to understand what's happening on the higher time frame first. So you know, I'm not entering this right now, but if it was to give a pullback, it could be a nice opportunity. All right, but if we get a breakout here, strong breakout, impulse, look for pullbacks. Because really, if price breaks above this structure point in the middle, which is the neckline, that's more confirmation that we're going higher, in my opinion. All right, just by me just understanding price action and how it reacts, that could be a potential setup for a pullback to go higher. All right, but if you understand what's going on in a higher time frame, this could be just a counter trend setup. This could be just pulling back to maybe give us one more drop before making that up move again. All right, but it's a lot of money that's still within this move. Okay, so with EU, I would say sit on your hands. You know, it would have been a good opportunity to enter down there, but you missed that opportunity. So I would say either wait for a pullback to look for potential buys, or wait for an impulsive breakout, look to pull back, and then go higher. All right, so I'm gonna cover one more, then I'm gonna pass it over to Ryan. GBP Chef, I think this was the last one on my radar. Unless you guys have any, let me see, GBP Chef, yeah, that's right. So GBP Chef, you see I already got the markups because I was over here doing the session with none of y'all on here. Didn't realize it. But so G Chef is a pair that I actually caught on a buy last week to end the week as well. So if you look at this, similar to GU, a lot of the pound pairs, price is overextended to the downside. But if you look at this weekly, it closed back above this level, this wick, around this wick. So that could be just a liquidity press, right? It could have a nice return up move here. So if we go down to the daily, knowing that price was overextended, you see it had this up move, so now it's pulling back. But where I was looking to interact, I saw some bullish divergence here, you know, where, you know, right here, price was extending, my RSI was showing some bullish divergence. And then if you look at this, this is a 2-hour chart, right? It's a chart a lot of people don't know about. You know, this is I love the 2-hour chart. 2-hour, 4-hour, but I highly focus on the daily and the 4-hour for more confirmation when it comes to candlestick patterns. But seeing this was a hammer, bullish hammer, pull back, and then boom, it gave me this morning star reversal, which is also a bullish reversal pattern, candlestick pattern. After that, look what you got. You got another bullish hammer. So it's showing all the signs of boom, breakout. So after that breakout, look what it did though. It had the impulse and pullback, right back to retest structure. Bullish engulfing, kept going. So on this pullback, I believe this was about a 61.8 pullback. If you take those fib from these lows to this swing high that it made, it pulled back to 61.8, perfect. Bullish engulfing. Seeing that, you could have entered. You could have entered after this bullish engulfing, really. Had your stop loss below the bullish engulfing. All right, risking about 89, 90 pips. TP could have been at the bare minimum, could have been back at this high. That's 150 pips, but negative 27 would have been the target, and that's the target that was hit, which basically lines up with this structure. Bearish flag to the left. Price action. Right? So now that higher high was created. Boom, that could have been a 270 pip setup. I think I might have caught 150 of it or so that I got out. But now, looking at what price is doing, I believe price is just pulling back to create a higher low. All right, you're looking at structure. You got this is the three wave I always talk about. 1, 2, 3. So sometimes it comes deeper. It don't always just reject right at the previous structure and you go. It could bounce from here, but I think price could potentially pull lower. That's why before rising. That's why I would say wait till the daily close, see how price is looking tomorrow. But I would love to see price come back down here because the price come back down here around 113. That could be a great setup with better risk to reward. So if it comes back down there, I see the price reasons I like to see. You could enter there. If I was entering there, my stop loss would be below the lower high, below structure. All right. And then in that case, you could risk anywhere from 50 to 60 pips. Right here is 45 pips, hypothetically speaking. And then TPs at the bare minimum. Oops. At the bare minimum, back to this high. That's 180 pips. That's 1 of 4 risk to reward. Or back to the high it made, or at least a few pips, maybe a few pips shy of it. That's still 350 pips. All right, so these are the type of moves you look for, and this is price action. Like price action, market structure tells you everything you need to see. All right, so I hope that helps. When we see setups, we will be letting y'all know. Ryan is about to hop on now, so stay on if you want to see what he's looking at. He's going to go over gold and GJ. Some of you asked for that. I just want to check UCAD real quick. Look like we're about to get the breakout. Look out for UCAD. That could be some sales. All right, and I'm gonna pass it over to Ryan. Gold and GJ, yeah, he's going to go over that. He's going to hop on now. 1 second. Oh, yeah, I got you. Hold on 1 second, y'all. I need to give Ryan control over the screen real quick. Hold on. One second. Give me a few. Hold on, I'm about to upload this real quick. Hold on 1 second. I'm trying to give. All right, try it now. 1 second, everybody. We having some technical difficulties. I'm trying to get Ryan to share his screen. Just give me 1 second. All right, he's about to hop on. I don't know if you can maybe sign in your sheet or something. Or maybe I don't know. Unless you can maneuver. I'm gonna leave. First chart. Go to one of the Forex or one of the first charts. Show them on the first one.
Is it am I on?
You know what I'm talking about? You said what?
Can you hear me? Let me see. Where did the chat? Oh, there we go. All right, yeah, so I'm not gonna be doing this on my trading view, so bear with me real quick. I usually like to use white charts, but still the same thing at the end of the day. It's pretty, you can trade on a PC, Windows 98, really, if I had to. All right, so the first pair I'm gonna go over is gonna be DXY, the dollar index, because that usually sets the tone for these other pairs. So, this. All right, so with this strong push of dollar index, it finally broke above 100 resistance last week, and it came as high as around just a few pips shy of 103, and right now it's currently trading around a little bit over 102. So right now, this 102 level is going to be key because it has yet to break above. It's currently just making wicks above, so we may get a retracement before the next move to the upside. So real quick, move this. Okay, yeah, so this 102 level right here, price, it wicked above, but it closed below, and then currently price is above, but we have yet to get a full break, so we may have to wait for the next daily close for us to actually see if we can break above or break below. But I would like to see something like this, arrow. So if we could break back below this, there's what is this? This top channel line right here. And if you look, this is the previous resistance level. So if we do break back above or break back below that, then we're going to be looking for a decline back down to these highs, which will be down these lows. So just like that. And that aligns around 100 resistance. So 100 resistance was the level we were struggling to break back above. So because we were struggling to break above that level on the retest, that would be the level that we look to potentially hit for the support level before possibly either breaking back below or pushing back up to the upside. So we're either going to get something like that and go lower, or we're going to get something like this and push back above. So now regardless, if we do get a drop down and price pushes up, price coming back above this 101.50 is going to be key, because if it does come up here and it fails to break above, that'll just be a breakout retest for the decline, even though overall we're still in an uptrend. But we could see something like that. If this level gets broken, possibly push down even lower like this. But overall, I just want to kind of wait and see if 102 level is going to hold or break, because we may not even get a retracement because the US dollar has been under a lot of steam lately and it's been pumping. So we may just get a push back up towards 103. And if we take out these levels, then overall, I'm just going to sit on my hands and just wait, because if you just look at it on a higher time frame from like the weekly chart, you can clearly just see like ever since 2018, we've been in somewhat of an uptrend. So price pushed up, and then from there it's been making higher high, higher low, higher high, higher low. Let me just draw it real quick. So price pushed up, pushed down, higher low, higher high, higher low, higher high, higher low, higher high. higher low, higher high, and then price finally pushed down. And even though it pushed down and broke this previous higher low, if you just look at where the bodies closed in the wicks, it's still the bodies closed above this previous low. And then just like that, that was just like a sharp decline. And then from there, we had a real rise to the upside. So overall, I would like to see a pullback back down to 100 support. And then from there, I'm going to wait to see if price breaks or bounce. If it breaks, we're going to push down towards 99 to 98.50. If it bounces, probably going to push back up towards 101 and 102 resistance. And from there, I'm just going to wait and see if we can finally get that break or if the US dollar is finally ready to make somewhat of a retracement before the next opportunity presents itself. All right, so that's DXY. I know people was talking about gold. All right, so with gold, you got to be real detailed about how this has been looking. All right, so with gold, hold on. With gold, you have to just be real detailed at just the price action on this pair, and it's going to tell the full story. So overall, the fact that we was in a strong uptrend and price pushed all the way up towards like 1,700, and then finally hits some resistance. Let me just draw this real quick. Settings. Boom. Okay, all right, so price pushed all the way up to 1,700 to a T, wigged above it a little bit, and then finally we got that retracement. When price pushed all the way down from 1,700 to around 1440, 1450, the fact that the wick pushed all the way down to this low, and if you just zoom in, the fact that the wick failed to close below this previous wick, so real quick, just so you can see the idea of what I'm talking about. Like this, you can clearly see that this low was lower than this low right here. So the fact that we was all the way up here and we got that sharp decline to the downside and price failed to break out these lows is kind of telling me a lot, as of at least right now, that we're not trying to break this most recent higher low, or not most recent, but most critical higher low, because this low came around, this was probably what, like around November, December of 2019. And then we got in that strong uptrend for 2020 from January to like March, and then we finally got the decline. So the fact that price whipped out this whole first 3 months of 2020 and failed to break these lows is kind of telling me that we may potentially see strong support at this level and push up to the upside. So the areas that I'm looking for price to push up to if we do hold, and overall, still, even though we're at 1490, don't get me wrong, because gold has been moving in large ranges, price can still push back down towards 1450 and even possibly back down to this low. So either 1450 or it could even break this low, come down to 1420, 1400 before going up higher. But because this is strong support, I would like to see 1450, 1440 hold. So even though we could push back down to the downside, as long as we don't take out these lows, overall, I'm going to be looking for price to push back up to the upside. And the target, 1,500. And if price breaks above 1,500, then I would like to see 1,550 get hit. So overall, that 1,500 is going to be key because price needs to break above that. But besides 1,500, this 1,550 is going to be like the most critical level for gold, because this is going to let me know if the overall market is trying to go bullish or bearish. So once price, if price breaks above 1,550 and we push back up to our once price breaks above 1,500 and we get to 1,550, we're going to see if we want to drop back down to the downside, or if we get that break, then overall this market is trending bullish. So then we'll get that break above 1,550. Price will come anywhere from 1,570 and 1,580 before a possible pullback back down to the downside, and then from there we may see new trend of higher highs and higher lows presenting itself. But that's only if we get a clear break above 1,550. Just keep in mind that from 1,450 to 1,550 is 1,000 pips. So regardless, even if you find a trade and it doesn't, let's say it doesn't drop this low, let's say it only drops to like 1470 to 1460, and then you catch a trade, you wait for a strong bullish price action. Let's say you don't even catch these lows because you don't want to gamble on what the highs and the lows are. So let's say price pushes down, find strong support on a smaller time frame, and then you catch it at 1500. If you are able to trade 1500 and then catch it up to 1550, even just that type of trade is 500 pips. So, you don't need to catch 500 pips in order to be a profitable trader. You could just catch half of that move. So, because sometimes some of these pairs, they take a little longer to play out, but you just got to know what's like what your personality is. Are you able to hold throughout the day? Are you able to hold through all the manipulation and the bullshit? Do you need profits right now and stuff like that? So once you answer those questions for yourself, because everybody's different, then you can kind of tell if you're able to hold throughout the day for the week, wait for price to hit your TPs, or if you're just good catching your 50 to 100 pips and then reevaluating another period. So overall, for gold, I would like to see that 1450 overall 1400 hold as support, and then if we get a break above 1500, I like to see price hit 1550. Once price hits 1550, that's going to be a key breaker bounce scenario where we're going to see if the market wants to go overall bullish or if it wants to go back bearish and continue the trend back down to the downside. Because overall, with everything going on in the world, gold is going to be one of the safe havens betting against the dollar. So as the dollar is getting stronger, like it was, just because it just broke above 100 and hit 102, came just shy of 103. That's why we see gold dropping, because it's a bet against gold. Well, the dollar is a bet against gold for the most part. And if the dollar index finally makes a retracement, then that's probably when we're going to see that move back up to the upside. So overall, that's gold. Let me see. One more commodity I'm going to go over is going to be U.S. oil. Oh, yeah, I got to do some of this stuff. All right, so U.S. oil just hit the overall TP2 on the long-term Fibonacci retracement. So I just took it from this high to this low. And just like that, TP1, negative 27, came around 33, 32, $80 a barrel. And then around $21 to $20 a barrel was the TP2, which just got hit. So overall, and if you just take a look at what just happened, price just made new lows. And these lows were formed around February 2016. So in 4 years, price finally made new lows. And just like if you just understand, like when Trump got elected and stuff like that, you know that this is going to be that new 4-year cycle, because Trump got elected in 2016 and now it's 2020 where elections is coming back up. So it doesn't surprise me that some of these commodities and some of these dollar pairs are making new highs and new significant lows of the overall market, because fundamentals pretty much just advances technical analysis for the most part. So if you can read technical analysis and you kind of have an understanding of fundamentals, you kind of know what's already going to be aligned with the world. So for me, I understood that gold was going to take any time. I knew it was going to take some time this year. I kind of thought it would take a little bit longer within a year, like around quarter 2, quarter 3, but we didn't waste no time into 2020. So as you can see, price from this high pushed down to this low, pushed back up, hit the 61.8 retracement, just like that, gave us a double top, and also was making lower highs and lower lows, because this high is higher than this high right here. Once price pushed up to this high, gave us a strong bearish engulfing candle. After that, price pushes up, fails to break above this highs multiple times, finally pushes up one more time, gives us one last hit to this supply zone, and then gives us another bearish engulfing candle. From there, price closes, pushes up one more time, retests that 52 or 54 to 53 resistance level, and then pushes down. We get to these lows right here, prices pushes down, retests one more time, and then finally gets a strong weekly or a strong monthly candle to the downside. So this move went from around 48, 49 resistance all the way down to 21, 20, 50 type resistance level. So overall, you can kind of just see the overall bearish, like the bearish trend with this pair. And because we just made new lows and we just hit the TP2, I wouldn't be looking for sales if you weren't already in. So more so, I would have to wait for any type of retracement. And because we're in a strong downtrend, we may not get any type of big retracement, or we may, see a big retracement because we just hit from 64 all the way down to 20 support level in like 2-3 months. So for me, if price does push it up, I would like to see it push up towards 28 resistance level. And if you just look to the left, that would be coming back to retest these strong levels of 2016 of these lows. And we may see even a higher break above that. We may push up towards these levels right here, because this was also a strong support level around here, here. So just because we did see a strong drop, we may get a stronger retracement before push it back down. But when I'm in a strong bear trend like this, I really, even though if, there may be a buy setup, I don't really like to trade too hard against the trend. I may, get in and get out, just catch my pips and get out. I don't really need to try to hold it and try to swing movements against the trend. So for me, if price pushes up, I would like to see something more so like this. If we do get a push up higher, then I'm just going to wait. So for me, if price breaks back above 30, 32 resistance level, then I'm just going to wait and see if price can push back up to these levels right here. And then from there, you could possibly redraw your fib tool, because the TP just got hit. You'll just draw it from this high down to this low like that. And then boom, as you can see, the first 38.2 or 23.6 like that, or you could even push up to the 61.8 back above $48 to $50 a barrel, and then just like that. So for me, it's going to be 3 next levels for me. The first level is going to be around here, around 28. The next level above that is going to be around anywhere from $39 to $40 a barrel. Well, anywhere from actually $40 to $42 a barrel. So the first one is going to be $28 a barrel. The second one is going to be $40 to $42. And if we clear that, then the next level is going to be at this neckline of this double top, where this zone hits right here. And that's going to be around $50 to $52 a barrel. But it may take a while if we do get that stronger retracement, because like I said, we are in a strong downtrend. These last 3 months have all been really bearish for the most part. So for me, I would just look for anything like that. So first thing I'm gonna look and see how price reacts around $30 a barrel resistance, and then from there I'm gonna just reevaluate and see if we get any type of bearish confirmation, or if the trend still looks like it needs to make a higher retracement. All right, so that's U.S. oil. I know somebody said GBP, JPY. Let me see. All right, so I'm gonna start off on the daily chart on this pair. So we found support around 124. And overall, if you just look to the left, that's also going to be a strong support level that hit around August, around 126, and we broke those lows. And then we got a retracement to the upside with this wick. So for me, we may get a push down a little bit, down to like 127 to 127.5 to 127. And then overall, if these lows are going to hold right here, let me just move this down some. If these lows hold, then I'm going to be looking for bullish momentum to back up to the upside. So for me, with GJ, that 127.50 to 127 level, I'm going to wait and see if price wants to move down there, because it's still only Sunday and GJ has wide ranges. And because we're in these critical times of with economics and stuff like that, GJ could move a lot faster. So I'm going to wait for the daily candle close. Even if, you know, I miss out on a few pips, I still think with GJ is going to make some type of pullback. So even if we push straight up to like 128.80, I still feel like it'll push back down to like 125. I mean 128.5, 128 before going higher. So there's going to always be another opportunity, so you don't have to rush anything. So boom, push down a little bit lower, and then for me, if I could just move it down to the 4 hour real quick. So on a smaller time frame, this is what I'll be looking at, because right now it's trying to make discrete higher highs and higher lows. So just like this, higher high, higher low, higher high, higher low. So if we do push down towards this 78.6, which aligns with 127.6, I'm going to look for a price to push back up to the upside. So for me, price first needs to take out this level, which is around 130. If we break above 130, it's going to have to break above 130.8. If we break above that, it's going to have to break above 132. If we break above 132 resistance, the overall is probably, it's more than likely going to hit this level up here, which is going to line around 133.6. And if we go a little bit higher than that, which is going to come around 135. But for me, even if you take it from 1275 to 130, like that's 250 pips. So that's enough for me. But overall, just looking at this trend, if we take out these levels, this level right here, then overall, I'm pretty confident it could push back up to here. And even if it does do something like that, it'll still stay within the overall trend, because just like any pair, there's always going to be a trend within a trend. And if it does push up to this 133.6 level, you can still see that the price will stay overall below this level right here. And that'll still be moving within this overall downtrend that price has been moving in. So just like that, if I draw this trend line from this point right here connected to this point, you can see that price broke out, and now it's just retesting that trend line. It was once acting as resistance. From right here, price gave us a bullish engulfing break, came higher, pushed back down. Now the trend line is acting as support. We may get a false break down a little bit lower, but overall, I'm bullish on GJ for the time being. But just understand that this is still an overall downtrend. This is just a correction move. And just because, you know, it's a GBP JPY pair, the correction move can move 500 pips to the upside, because this is one of the more volatile pairs, especially because it's a JPY pair and also a pound pair. So that's GBP JPY. I'm going to look to see if price wants to push down a little bit lower. 127.5 to 127 is going to be the levels I look to target. If it does push down lower and it comes down to that zone, I'm possibly going to look for buys. Just place your stop loss like 30 to 40 pips below 127. Or if it comes to 127.5, put it just 20 to 30 pips below that level. And then try to look to swing trade this pair to the upside, or whatever you feel comfortable with doing. All right, so that's GBP JPY. The last pair I'm going to go over is going to be Euro Jappy. So I was supposed to send this out last week, but pretty much Euro Jappy's moving in like this wedge type form. So if you just draw a trend line from that high down to this low, so connect this point to this point. Let me see. All right, so price came, hit that, rejected that. Also came here, gave us another rejection. So really we're trapped in this range, and then if you even take it from the bottom point, actually I don't need to start from now. Like this. All right, yeah, so right now we're pretty much trapped between 119 to 117 support level. Last week, price would hit 119, and I was saying that 117 was possibly going to get hit, and if we broke below that, 116 would get hit. So we never really strongly broke below 117, but price still ended up dropping like 200 pips from 119, even probably a little bit over 200 pips. But we still been trapped within this range of 119 to 117 for the most part. And right now, currently, price is just a little bit above 118 resistance. So for me, let me see. We can possibly have two type of scenarios. So the first scenario would be, let me go back to the daily real quick. So you could possibly see from here to here. So 78.6 retracement, price push down. You see how you have all these wicks like this? This is why we're in this range, because there's no detail like type of price action showing us where the market really wants to go. Even though we're kind of in this small downtrend, the fact that we have a wick to the upside, to the downside, wick to the upside, to the downside, wick to the downside, upside, downside, upside, downside. The market really has no clue where, I mean, it has a clue where it wants to go, but I feel like for right now, it's kind of just collecting orders, waiting for that breakout either to the upside or to the downside. So really you would want to ideally wait for a break of either above or below these levels right here. And because we're having a strong time breaking below 117 and 118 right now, we may see a pushback to the upside before the next scenario. So we may see a pushback up like this, and then another drop back down to the downside. But overall, we're just trapped within, for right now, we're trapped within this range. So for me, you would need to see, in order to really take a sell, you would want to see something like this, a break below. Wait for that retest of either one of these levels. And then you could take it to the downside. And then to this downside, I still feel like this 117 level needs to get broken, because that also aligns with these wicks right here. And if we could break below that, then overall the market's going to come back down towards these lows and then possibly break those lows to hit 116. So that's the downside bearish scenario if we get a break below this bottom trend line. But now for the upside move, let me just delete this. For the upside move, price would need to break above 118.5 first, break above 119. Even if it did something like that, you're going to wait for the pullback back down. It may not come back all the way back down to this low. It may only come down 50 to 61% of that, like that. And then depending on how this pulls back, because now if it pulls back down and breaks back below this trend line, then overall the bullish scenario isn't valid. But now if it pushes down and it stays above 118.5 to 118, we're going to be looking for another wave to the upside. And overall, if we take out these levels, let me just draw the resistance. So if we take out this level, because price would have broke above 119, if it breaks above this 119.3, because this is a critical resistance level, then overall I'll see price push back up towards 120 and possibly 120.5. So that's going to be the outlook for the bullish scenario. So really for me, it's best to wait for the breakout in either direction. Right now, I currently favor the bearish breakout, but because last week I kind of thought 117 would get broken and then 116 would get hit, the fact that it didn't break 117 and it's just been hitting 117, pushing back to 118, pushing a little bit above 118, pushing back below, pushing back towards 117.5 to 117, and we can't get a clear direction of the trend. You kind of just want to wait for a little bit higher probability for this trade, because now if you take the sell here and price needs to push back up, that's going to be that's going to hurt your account if you don't use proper risk management, and that's really not a good trade, because this is going to be a strong support level. Even if I come down to a smaller time frame, this is a strong support level. You can clearly see like price pushed down, found support here, pushed up, found support here, found support here, found support here. So I really don't like to sell at support. I would need to see price push up, shows any type of bearish rejection, and then sell it. But now, if you're overall bullish on this pair, then if you did want to take this buy, you could just put your stops below either this wick right here or above this wick. But right now, I'm kind of just like 60-40 on this. I'm kind of 60. Yeah, I'm like 60-40 on this. More favor in the bearish scenario. But yeah, that's pretty much. I mean, I feel like I'll update depending on how the daily candle closed and throughout the week, because it'll probably show a little bit more. Like it'll show like his hand, I guess, a little bit more, and you can kind of dictate where the market is going to go throughout the week. But because it's still early and it's trapped within this range, you kind of just don't want to take the trade so early on. So that's EJ, and then let me just go over and see what news events is coming up this week. So this week is not that many news, which is actually better for me. I don't really like to trade when there's a lot of volatility going on within the markets. So we have news on Tuesday morning, composite PMI, which is Purchasing Managers Index, manufacturing PMI, services PMI for the pound. We have new home sales for USD, CPI, which is Consumer Price Index, crude oil, of course, on Wednesdays. That's all for the US dollar. We have a CPI also for the pound. So the pound pair, that's going to have some volatility this week because there's news Tuesday, Wednesday, and Thursday for the pound. You have news Tuesday, Wednesday, and Thursday for the dollar. But even without the news for the dollar, I feel like that could always still be volatile because of what's going on within the markets, S&Ps, dollar indexes, stuff like that. And then on Thursday, we have more pound news, retail sales, Bank of England interest rate decisions, meeting minutes, and then we have GDP, gross domestic product for the dollar, which could kind of shake it up, but that's on Thursday, so that's later on within the week. So that's another reason why I feel like with this week you kind of want to wait until like Monday, Tuesday to really take those swing trades or look for those longer term positions. Early in the week, if I do take trades, I kind of just hop in and out because the market hasn't really settled in yet. And seeing this, that there's no news Sunday or Monday, that's just giving me more indication that I'm going to just wait a little bit longer before I actually start trading seriously. So overall, that's pretty much it for right now. If you guys have any questions or any other pairs that you want me to go over, you could just drop it in the chat real quick. If not, we'll just wrap this up. So yeah, we'll send out more updates throughout the week. Like we said, this is just an overview, so don't take this too serious. This is just to give you guys an idea of where we're at, what we're looking at within the markets. You don't want to just blindly trade because we're looking at this or we think our bias is bullish or bearish, unless we tell you guys it's a signal or we enter that trades personally. So overall, I don't see anybody saying anything in the chat. So hopefully you guys learned something in this video. Hopefully everybody's staying safe with everything's going on. Make sure you stock up on goods. I don't know when this thing is going to end. Yeah, so keep an eye out for the Telegram. Make sure you turn on your notifications. If you guys can, follow us on Instagram at Epic Analysis. Show support. We're going to be sending out more signals. We're going to be dropping our VIP program pretty soon, probably within next month. So keep an eye out for that if you guys want to take action and be hands-on trading, get more actual analysis, get more actual hands-on training where we're specifically working with students one-on-one, stuff like that. So keep an eye out for that. We're just always going to look to get better with everything. Thank you, Samantha. Appreciate you. So yeah, everyone, have a good weekend. Hopefully you guys stay safe. Let's catch some pips this weekend. Look out for more analysis throughout in the Telegram. Thank you, everyone. I'm about to hop off now. Yep, you guys are all welcome. See you on the next hangout next Sunday.